Hey everybody, alright, so let's just quickly go over what's going on in the market. Let's delete anything. Alright, so we see that ES basically rallied up here, and I went over the last point of accumulation, or when it was accumulated. So we see this pivot right here. Where was it? Here. So this is where you had the accumulation. You can very clearly see it, right? So it's just a bar chart and a point figure chart, folks, with volume analytics and all that. The idea is from the daily it pulled back, it hit this candle here, right? When it tapped that candle, all of this accumulation was going on, and then just broke out with the base in the background and all of that. Now it rallied and it's up here now. So now it's going to get interesting now because, well, it looks like it's entering some type of consolidation up here. So, and also I'll go over the trade as well. But the idea is, you have this daily rally. How does it look at from a tape reading perspective? Using tape reading chart. Tape reading chart is just a point figure with volume chart. It's just taking the point figure and then add volume to it, and then know what you're looking for. All right. So it's not rocket science. It's just volume at price is all it is. All right, so this is a very nice accumulation. Goes up here, making higher highs. This higher high. I mean, I'm not sure if I can consider this volume heavy. This higher high here, the volume isn't really there, and then there was some selling in here. You see, like you made that higher high, not really that much juice, and then you had that 36 and the 47 on the way down. And by the way, that's 36 and 47 times 10,000. 360,000 and then 470,000. And then over here you have 42,000, and it seems like it's going sideways. So there's a lot of point of control volume here. I mean, there's a lot of volume traded up here. There's more volume traded up here. I don't know. I think might have been more than here. So maybe it's getting ready to fall back a bit. But the first pullback to test the breakout was against this 53. The 53 is what is the breakout volume, right? So you know that what happens. You have a rally, pull back to test. Where is the other breakout volume? It's right here. From the accumulation area, this is the breakout volume, right? You see the break above the highs with increasing volume. Now you see the break above the highs here with increasing volume. And this here was the first test of the breakout. Why is that important? Because I explained that already, that there was going to be a trade setting up from there. And you saw what happened today, right? So as the market pulled back, it did this shit right here. This right here is on the test of that breakout. That breakout on 330,000 contracts is being tested, and this price movement started going sideways. So it just pulled back to test that breakout area, ding a ding a ding a ding ding, straight down, and the lows, you have some shortening of the thrust here. I mean, it's not thrusting really that much lower, and finally you had the higher high. All right, now that's like 8 o'clock in the morning, I think. Oh no, 8:30 in the morning. It cracked this area. It cracked this area because, it's basically just a test of a breakout, right? So you have breakout, you have a test of the breakout. What happens on a test of breakout? Well, if that's considered the support level because it was resistance before, they're going to reaccumulate. And that's happening right here that I'm showing you. Right? So you had this, you had a little, the little spring. test, you know, and then you had this break on increasing volume, 51,000 contracts. It didn't look very aggressive. Let me just say that, because I expect the volumes to be higher here, but they're really spending that volume in the accumulation. You see, like 43,000, 28,000, 30,000, 32,000, but the biggest print here is 22,000. So they spent some time, some money buying at these prices. They're buying here 43,000, 28,000, 30,000, 32,000 contracts. Load the boat in this area, do a spring, test, and crack. Takes out, very important, it has to crack, it has to take out the higher highs and pull back to do a little test, and then it just went crazy. Just went crazy. You know, no. Now up here, you have a nice big print and pull back to this area. So we'll see what happens, but this is what I'm talking about. What I'm showing you here is how a campaign is conducted on an intraday basis. You do it on a swing basis, which I showed also. The swing basis, you need daily chart, daily, pull back to a level, accumulate, break out into markup. Now it's going to come back to test the breakout in one of these prints. So you go to a lower time frame, accumulate, or I should say reaccumulate, breakout, boom. Now where are the levels here? This is already tagged, but I don't know. This one is tested, but I'll tell you this. If it comes back down here, these guys right here, this is where you have edge. This is where to look for the next reaccumulation. Alright, so when it comes, let me see over here. So last time this accumulation occurred here. See that? The area before the break, the reaccumulation occurred there and broke. And it's non-tested now. Same thing, go back into that area, reaccumulate, and break. As far as intraday concerns are concerned, you look for break, test of the break against high volume areas. See if those buyers are going to re-enter or new buyers are going to buy and accumulate and then break to the upside. And why is this a natural edge? Like, you know, you all know about test of breakout and breakdown. Why is it natural edge? Because those high volume areas, someone's short. If they're short, they have to cover. So if they have to cover because they're underwater, it will give you added buying pressure. So doesn't it make sense, if you're going to run a campaign, go to the area where you know you can buy and have additional, you know, orders to push up the market. So this is a natural edge in my opinion, because you know for a fact that if whoever took the other side of those trades, because there's a lot of volume and you need buyers and sellers, if the market moves up, the sellers are underwater, what are they going to do when the price goes back down to that area? They're going to cover. They're going to cover by how? By buying. What does that buying do? Adds fuel for the next rally. That's what's going on. Alright, so maybe you get a retest of this area right here. You know, the breakout, because mostly when you have breakouts, right, they get hit once, then they get, there's a spring or some type of test, a retest of the breakout, test of breakout. And if it doesn't go higher, what do you know? It goes lower, like near the origin of the rally to, and I don't see that much. Well, I guess it can come down here. You have 849,000 contracts traded across this line. So this line and support line, it might hold there. If it falls and takes out the breakout and doesn't spring, it can go to that support area and you have some juice there. Otherwise, it's back to the lows right here where you have 48,000 contracts traded, and then we'll see what happens. Again, you don't really know, you're just seeing what are the possibilities until it goes there and accumulates, until you see the accumulation, until you see the breakout going from accumulation into markup, or vice versa. Like over here, there's not enough distribution. This is not enough distribution. So it might have to come back and do more distribution and then break if it wants to go lower. Otherwise, it'll just pull back to test this area here, reaccumulate, and bang, go for the next cycle. So this is the benefit of Wyckoff. I don't think this is really talked about enough, but it will show you, this chart will show you a lot. But you need to have those Wyckoff concepts in mind. You need to know climactic action or change of behavior. I'll give you an example. This 50 here, right? What is that? That's the biggest red print in a lot of prints. That's a change of behavior, and that's initiating this pullback. So where's your climax over here? Climax is right there. Where's your springboard? Springboard must be here. It's in the hinge. In a point figure chart, the springboard will look like a hinge. What is the hinge? Small columns like that, and validated by a big move, which is right there. So really, it's just applying Wyckoff concepts to chart. Okay, forget about that right now. Let's take a look at what's going on with market breadth. On the NASDAQ, you had heavy selling and you had this low, but I wasn't convinced because you don't have a springboard yet, right? In the market breadth, you have selling, you have heavy selling, but the pullbacks, as I explained, they are too strong. So even though you have selling, you don't have a lack of demand. The demand is still there. You have heavy selling again, 1230, but look at the demand, 1680. So these buyers, they're not tired of buying, which means the market will continue to go up until you see selling followed by lack of demand. Here on the New York Stock Exchange, we had 1255 down, 991 up, meaning hey, the buyers are still there. Then 1158 down, but 1452 up. Back, and bulls are back. Bulls are back. That's what the data shows. So what are you gonna? You cannot. Isn't that more important than watching some guy on TV? If I show you that more stocks are up than going down, what's the logical conclusion? Bullish, right? And if you see this selling coming in strong, you want to look at the pullback. Okay, they're weaker, but it's not enough to turn trend. Why? Because in the next wave, all this buying came in. That's the biggest buying in 10 waves. 10. And that's on a daily level, daily time frame. So you gotta get those sellers in. That doesn't mean you can't intraday trade, but it means that on the daily time frame, it's still bullish. And until you see the selling pressure continue down, break lows heavy, you gotta still be bullish. All right, take care, bye.